Hello and welcome to the Small Business Briefing. I'm Brian Calley, the CEO of the Small Business Association of Michigan.
Good afternoon. Thanks for joining us. I'm Sarah Miller, Vice President of Marketing and Strategic Communications. We appreciate you being here today. I want to welcome one of our newer members, Webside Man LLC out of Grand Rapids. So welcome Theo Afori and your team. And we are saying welcome to this new member on behalf of our sponsor, Consumers Credit Union. Please visit consumerscu.org to learn more. All right, Brian. So we have quite a bit of topics to cover today. Let's start with kind of an older story about redistricting. The legislative majority changed the last time the lines were redrawn, and there have been some legal challenges, but most of them didn't get anywhere. In a previous show, you did kind of indicate that there could be a violation of law in Southeast Michigan with these lines. So take us back. What's being challenged here and what might the potential remedies be?
Yeah, this is an issue that there's very few cases remaining, but there was one particular issue. If you think back to when we were talking a lot about these new legislative lines, there was one particular issue that I thought where the Redistricting Commission may have violated federal law. So there's federal law that says when you draw legislative lines, so these should be like for state representatives, for state senators, and then for members of Congress. When you draw these lines, it has to be done every 10 years. And that's because there's a census done every 10 years. After the census, lines are redrawn so that population per district stays about the same. And there was a wholesale change. The districts were radically changed from what they were before, and they were changed in a way that that made it much more likely for the legislative control to flip, and then it did. But now there's a lot of different ways you can draw lines, and just having lines drawn, even if they might be biased one way or another, doesn't necessarily mean illegal. The part that I thought was legally questionable, though, was in Detroit. So there's federal law to protect minorities that says that you can't dilute districts so that it makes minority representation unlikely. And so what that is meant to do is to, and it's really going back to the 1960s and practices down south, but the idea is that you can have districts, that are more likely to elect minorities and majority minority districts. In Michigan, though, there was a different type of an approach taken to that. So instead of saying we're going to have more districts that were more likely elect minorities, it was a matter of Republican versus Democrat. They said, look, there's too many districts that are tilted toward Republicans. If you split up Detroit in a bunch of different ways, take a little bit of Detroit, put it with this district, another part of Detroit, put it with that district, then you're more likely to tilt the map back toward Democrats and make it more fair between Republicans and Democrats. The reason I thought that was legally questionable is because in order to do that, they had to make it so that districts with there's a reduced number of districts that have a majority of minority voters, and so there was a lawsuit filed in federal court. Most of the other lawsuits on the other types of challenges have been dismissed. I wasn't surprised about that at all, but in this case, it will go to trial. It's a pretty big news story. Was it last week or maybe it was late in the week before Labor Day? But this moving forward, this trial moving forward, and has to do with the seats in Southeast Michigan. That is, it's a pretty big deal, and so it'll give a couple of things. First, it will look at the federal law that governs these things. Before, it was always a matter of, hey, if you got an area that is a majority of minority voters, then you should have districts that have at least 50%. 50% plus one, if you will, of voters in that district that are minorities and therefore more likely to have minority representation in the legislature. In this case, they used kind of as a proxy, instead of majority minority voters, they said, hey, we could have a majority of Democrats. And then you could make it more even, and then that would be better for minorities. And so it's just a totally different way of looking at the Voting Rights Act and federal law. So that has been challenged. If you're to look at the map, actually, I was thinking ahead. I've got a few of the legislative maps up on my up on the doors that come into my office here. I could show you, but if you look at the maps in Southeast Michigan, you'll see kind of pillar-shaped districts that reach up into Macomb County and then have kind of a pillar that goes down into Detroit, and then Oakland County, and then kind of a pillar, a skinny, long district that goes down into Detroit. And the reason why I think that this lawsuit has potential actually to require a change in these maps in the future for them to be redrawn is because the number of people in the legislature who are the number of districts represented by minority legislators, especially Black legislators, went down in this last election. It was a very predictable outcome. So you had a new interpretation of what is required under federal law. You had districts that were drawn with shapes that were clearly meant to disperse the Detroit population and make it so that there are fewer people from Detroit who are elected. And then you have the outcome of the last election, fewer legislators of color. And that is all those things together, I think, made it so that it did warrant a very close look. In fact, a trial in a federal court here in Michigan, and this will be one that we'll follow closely. Now, I want to make sure that people understand this does not necessarily mean that the remedy, if the law was violated, is that the lines have to be redrawn. That is one potential outcome. And even if the lines are redrawn, it doesn't necessarily mean that the legislature would flip back. It doesn't necessarily mean that it would affect lines all across the state. It could be that lines could be redrawn and it would only affect a handful of districts in Southeast Michigan. All that would be yet to be determined. Would they send it back to the Redistricting Commission to redo? Would the courts impose new laws? All of these are possibilities of things that could happen. But I think it is a pretty important change or a pretty important question, because in Michigan, you got it one way where it's like, hey, Detroit was split up in order to give Democrats an advantage. So that's the claim here. In other states down south, what they're saying is that that areas that have a lot of minorities were split up in order that Democrats couldn't get elected. And so you have like the same thing that is claimed to be used in opposite ways. So taking districts that have or cities, jurisdictions, majority of minority voters, and splitting them up for literally the opposite reasons. There are cases that are moving forward for very different purposes in different areas of our state. Michigan is just one of them. So it will be it's a fascinating legal question that's being asked, and one that has constitutional ramifications for the majority and the legislature, and also in Congress. So this is it's a big deal that one of these cases, and it's the one that I thought was the issue that I thought was most likely to trip up Michigan's maps, it's going to trial, and we'll see how far it goes. I would not be surprised if this question, because of these opposite cases, these opposite kind of perspective cases being asked in different places, would not be surprised in the least if the final decision on these issues was answered at the United States Supreme Court.
All right, now let's get an update on the UAW contract negotiations. We might have a little glimmer of hope here.
Yeah, so I say, glimmer is the right word. So not like a lot, but a glimmer of hope here. For the first time, there was an acknowledgement by the new president of the UAW, Shawn Fain, that the auto companies were moving in the right direction. There had been a lot of frankly insults that had been hurled before, taking the offer from the auto companies and throw it in the trash on Facebook Live and that sort of thing. And to be clear, when Stellantis put forward their offer last week, kind of formalized the direction they were going, it was somewhat ridiculed, but because it did move beyond where Ford and General Motors were, there was an acknowledgement that it was at least moving in the right direction. This is the first halfway positive thing that I've heard said from the new head of the UAW in the context. So to me, that was something, and the idea that there was also an acknowledgement that there was some compromise that would be required. Again, I hadn't heard that before. So these two things gave me, I wouldn't say an expectation that that things will be settled this week, but it seemed maybe a little bit more possible as compared to before. Now, the main issues do seem to be zeroing in on wage tiers, they have a number of temporary workers that the automotive makers can use, and then of course wages overall. The unions asked for 46%, 20% right away, and then a total of 46% over the life of the contracts that are being negotiated right now. Ford came in at 9. General Motors came in at 10, and then Stellantis last week at 14.5. And they're also negotiating. There's wage tiers. We don't need to go into all of that, but also the unions look to have limits on how many temporary workers can be used at any given time by the automakers. So those are the things that seem to be, at least in the public sphere. These are not public negotiations, although these details are a little more public than they have been in the past with all the media work that is being done through the negotiation. So a few things that tell me that there at least is a real negotiation happening, as opposed to just kind of lining up for a strike. Not enough to where I think a contract looks particularly likely at this moment, but it does look possible. Whereas if you asked me a week ago, I'd say I don't even think it's possible. And these sides are gonna come together.
All right, well, speaking of unions, the National Labor Relations Board recently resurrected an old practice for employees to organize at non-union shops. What does this mean?
Yeah, and this happens when, when there are appointees that are replaced over time in presidential administrations. These different boards, which that direct policy or have a say in policy and federal bureaucracies, can start to implement changes. And in this case, it's one that could allow for, and this is one I want our members to pay special attention, again, for our members who have employees, and especially thinking the manufacturing world might be the most at risk. If the way that it has worked in the past is there has to be a formal election among your employees in order for your shop to be considered unionized, and then in that case, then there's a whole set of rules and procedures that you have to follow. You must negotiate in good faith with a union on behalf of your employees. But before that happens, right today, or before this rule change, there has to be a formal election. That is not necessarily the case with the action that the National Labor Relations Board took. This I think it was last week, or maybe it was the week before. And so what it allows now is for some an informal process for a union to informally talk with employees, gauge support for the union, and then go to you, management, and say, we represent these employees. And then what you can do at that point is either accept that, or when I say you, I'm assuming I'm talking to business owners right now, either to accept that or to demand an election. And if you go through the process of demanding an election, now at that point you're subject to claims of unfair labor practices. It can be a very expensive, long, drawn out process. And so what it does is it kind of gives a presumption that a union can take informal steps, communications, and determining support for representing the workforce, and then claim it. And then it's on the business essentially at that point to require, call for, demand a an election, and that at that point, the protections that they have as a union in terms of their position they have in the process is different. You're now subject to all the rules and conditions, whereas before, it's in other words, they take a step, and now you're subject to more rules and regulations than you would have if they had to have the election before that step was taken. It's something that I think probably would matter more to the manufacturing industry, maybe the construction industry, more so than a lot of our members that might have, if you have a relatively small workforce where, say, fewer than 10 employees or 10 to 20 employees, I don't know that they're really going to target those types of shops. But as the automakers make changes, especially going to electrification, much more automation, far fewer components, the number of employees that the automakers are going to need overall is going to shrink. That means that unions are going to shrink as well, unless they find new members. So the idea of kind of creating a new avenue to go out there and organize is something that you ought to be on the lookout for. And then to the extent that you don't have kind of a regular ongoing engagement with employees, it probably would be a good time to just consider that in terms of how good your relations are within the workforce, how good the communication is with the workforce, and just be aware that these rules and regulations change. They change without new laws passing. They change within the authority that the bureaucracy itself is exercising.
All right, and now it is time for Data Monday.
All right, so we've got a bunch of things to talk about in Data Monday because we haven't done one in a little while. We had Labor Day, and so let's talk a little bit about unemployment to start with. So here's unemployment, 3.8%, ticked up just a little bit, and so while that generally would be considered a negative thing for unemployment to tick up a little bit, in this case, though, it was mainly for good reasons, because the overall labor force participation improved a little bit. So you see the blue line here in the middle. This is the overall labor force participation in America, went up to 62.8%. You see that men as the orange line, women as the purple line, and both of those went up as well. So overall labor force participation rate increased, and that's a good reason to see the unemployment rate go up. Because remember, the number of people that are either working or looking willing and able and looking for work counts as unemployed. So the number of people looking for work actually increased. And then looking at where the increases have happened since before pandemic. See this white line on this chart? That is basically when the pandemic started. So if you look at labor force participation and you look at as a percentage of where it was before, US born civilian labor force is up a little bit. That's the blue line, up just slightly. Again, indexed to right before the pandemic. But foreign born labor force is actually up quite a bit, almost 10%. Now, keep in mind, that's a smaller, so it's a bigger increase on a smaller population. But if it's no different here in Michigan as well. When you look at our population trends, it is actually immigration is the only thing keeping us slightly positive right now. Now, looking at this kind of the overall here nationwide on a bar chart, you'll see that the civilian labor force, according to the household survey, which is my favorite measurement of this statistic, up 736,000 across the nation. Now, why would that be? Well, part of it is wages. So if you look at the median wage growth in America, 5.3%. Now, given that's 1.5% lower than it peaked out. Remember, this doesn't mean when you see this kind of turnover in this number where this number is coming down, that doesn't mean that wages are falling. It means that they're still increasing by 5.3%. Last year, they increased by, over 6.5%. So it's this is just an indication of the rate of increase. And you'll see, historically speaking, labor force and wages are still rising. And that's one of the reasons why you see people jumping back in. Also, last time we did a Data Monday, we looked at debt is rising as well. I think that there's a lot of things that are kind of pulling or pushing people back into the workforce. Breaking it up according to the upper income, the top quartile, the highest earning quartile, and the lowest earning quartile. They look a little bit more similar. You see the lowest earning quartile, the percentage increase, again, has rolled over. That percentage that it's going up is now 6.1%. If you go back last year, it was up about 7.5%. But again, this does not mean that those wages are going down. It means they're still going up, and they're still going up a lot, just not as much as they went up last year. And then U.S. employees on non-farm payrolls. So if this is basically private sector employment, and if you look at this bar graph down here, you'll see that this is that famous kind of soft landing everybody's talked about. So the employment market does appear to continue its descent into that, what is hopefully a soft landing. So not negative, employment is not decreasing, but it is growing at a much more modest pace. In fact, if you were to take out this one part right here, which is January, we had a really hot January. If you take that out of the picture, it's just a very clear, slow downward trend, which would indicate that the employment market is starting to cool. But that is not likely to cause high unemployment, because our demographics, there's just not enough people to have employment go up, save for a really bottoming out of the economy, which doesn't appear to be very likely. Now, if you're to look at total employment across the country, you'll see that part-time is up a little bit, full-time is down a little bit. Remember, the previous chart, or the previous chart, we're looking at that new job growth. This is something different. Right here, we're looking at total employment. So full-time total employment down a little bit month over month, part-time up a little bit month over month. And then looking at initial jobless claims. So initial jobless claims in blue, those are about even. So they had been going up. So the number of people that are applying for unemployment, newly applying for unemployment, it had for a few months been going up, and then now it's leveled off. But looking at those that are continuing jobless claims, so those that have claimed this month that are continuing from previously, that's on the rise a little bit. So both of those actually kind of generally moving in the same direction, as opposed to when not too long ago they were moving in opposite directions, where new unemployment claimants were going up and long-term were going down. So temp, I wanted one other in the employment area I wanted to point to is the use of temporary workers is falling now as well, which I think another sign of a slowing demand for employment overall. Now let's take a look at corporate profits. We see that corporate profitability for the last 3 months has been down, and it's been flat 2 of the 3 months before that. And but this doesn't mean corporations are losing money. I want to make real clear too that in this case, when this says that for the last quarter actually was corporate profits down 0.4%, what that's talking about is the level of profitability was 0.4% less quarter over quarter, and that doesn't mean they're losing money, just means the profits are smaller. If you look at corporate profits as a percentage of corporate GDP, so think of that kind of generally as sales. So this, you have to look at the y-axis on both sides of this chart. So if you're to look at employee compensation, that's the orange line, as a percentage of corporate revenues, you'll see that that it's gone up. So here at about 58.5%. This it's generally on the rise, and then corporate profits in blue. You have to look at this axis. So that would be, it had been about 10% of sales, and it's fallen down a little bit below 9% of sales. So as you see, wages go up, profits go down. I want to make clear, though, also that there's a lot of reasons why employee compensation as a percentage of corporate GDP would go down. It's not just the wage rates, but it's also things like automation and artificial intelligence that allow an entity to operate with fewer people. So this is just wages moving up and down. It's also how many people. I wanted to point to this here, the GDP for our country going all the way back to World War II. And the reason that I wanted to show you this chart is because if you're to look here, GDP falls here, got a recession. This, everywhere you see this in red, that's a recession. So GDP falls, recession. GDP falls, recession. GDP falls, recession. Right here, GDP fell and there wasn't a recession. Pretty steep decline, although it didn't fall that much once it fell all the way down here. So if you look back, these sharp declines in GDP typically come with a recession. So what's happening here? Pretty sharp decline in GDP. Couple of things. First is that we had a big decline and a very short recession with the pandemic, and then a huge increase. So a lot of this spike down and up, that's very, very specialized to the pandemic. Is that comparative to any of this stuff back here? I don't know. But I think it's worth pointing out that as GDP comes down, that the risk, of course, of recession goes up. And then talk a little bit about investor activity. IPO, initial public offering. This would be like a company going public, selling stock publicly. And look how anemic it has been since really going back into 2022. Really almost non-existent. Very, very little IPO activity. And let's finish up with a little bit about home sales, or real estate sales, I should say. In this case, we're talking about investor purchases. So this would be non-homeowner occupied, way down in terms of that that type of activity. Also, the purchase, the real estate purchase index, see that is down as low as it's been since the mid 1990s, and that means buying conditions are poor, and not a surprise to anybody, right? So interest rates are up. Prices of real estate are up. So high interest rate and prices being high and inventory being low means that the purchasing conditions are poor. And final slide here is on inflation. This is looking at the PCE inflation index, and this is a little bit different than the consumer price index, which is the one that gets all the headlines. This particular measure seems to be the Fed's favorite in looking at it. I just wanted to share, though, as a bit of encouragement that whether you look at 1 month, 6 month, 1 year, they're all coming down. So when you see these moving in different directions, you see year over year down, but the monthly is up. That, that's a concern, like that's going to catch up to the average and push the annual rate up. But in this case, they're all going down, and I think it's just an indication. You put that together with the employment data that we have seen. You put that together with the wage increases starting to show some signs of moderation. It tells me that threading that needle of having of getting inflation under control without causing a recession, threading that needle looks very positive, or very possible to me. And so there's signs of softening, not necessarily indicative of a recession, but there's definitely recessionary risks out there. So that's the report. I know that was a real data heavy thing to go through. It's just that it had been a few weeks with the holiday and just kind of the way the weeks fell, where we didn't have a data Monday for a while. So it got stacked up there.
All right, well, thanks for that report. before we let everyone go today, I want to let you know that we have a webinar scheduled tomorrow at 11 a.m. It's on Secure Act 2.0, and that's 4 key changes for retirement plans. So this is a great informational webinar. If you're not even able to attend tomorrow at 11, make sure you register anyway so that you can get that recording as soon as it's available. So again, that's Secure 2.0, 4 key changes for retirement plans tomorrow at 11 a.m. You can register at sbam.org/events. Have a great week, and we will see you here on Thursday.
Thanks, everybody. See you on Thursday.